Really?
So this week, I had the opportunity to be interviewed on CNBC about the market in Austin, Texas. And it was actually a follow-up interview from this time last year. So they were asking a lot of questions about how the market has changed. And of course, there's a lot of prep that went into that. A lot of questions were sent to us ahead of time. And of course, there's never enough time to cover everything. So I wanted to make sure that we followed up and provided for you all a more comprehensive look and an accurate look, because as we know, mainstream media kind of picks their own agenda to match the story that they want to tell, and it might not always be as accurate as we would like for it to be. So we're going to take this time to kind of share more details in a few recorded sessions that we're going to roll out over next week and a half, right?
Yeah. Definitely. So really the market overall, it's been incredibly weighted towards sellers, and the trajectory has been in such favor of sellers that any adjustment from that seems to have implied that that's now a negative situation for sellers, but that's just not the case. This is amplified by that mainstream media that Jeannette was mentioning, and the headlines that prices are tanking and the market is crashing, but that's not the case either. We are seeing a reset on the listing price, and buyers now having the opportunity to negotiate. So really it's favorable to both sides of the aisle on that.
Yeah, exactly. Now, it does take a little bit more strategy for buyers and sellers. It's not like what we've been experiencing the past 24 months, where it's just a frenzy of purchasing, listing properties seemingly with no real comps to match it to, just for more and more and more. And the conversation with sellers really becomes less of a value conversation, meaning, is the house actually worth X price because the kitchen is amazing or the backyard is private? It really becomes more of a strategy question, as in, how are we going to price this property relative to the market at this point, or relative to where competitors are? And for buyers, really, how can we be creative in our approach, maybe in our financing, to get a similar acquisition cost or payment that we would have had when interest rates were much, much lower?
Certainly. And we have to say to sellers, let's not get greedy. We no longer have to see sellers kind of annihilate the buyer in order to have a successful transaction. Sellers are still walking away with a huge number, as appreciation in the marketplace has been quite high in most sections of the city. And honestly, we're still seeing double digits right now in that appreciation.
Yeah, absolutely, we are. And of course, when you see any kind of shift like this, and I think this is fueled by the media also, a lot of clients are saying, are we in a real estate market crash like we were in 2008? And I don't think so. In fact, part of what fueled that was mortgage delinquencies, and we are at the lowest rate in history. And that's just one of the major differences between 2008 and now.
Right. And according to the Wall Street Journal, Blackstone has $30.3 billion, not million, that's billion, ready to buy U.S. houses after the crash. So that's great, Blackstone. But if you're coming to Austin, Texas and wanting to buy homes in the medium price point, still be willing to pay, because our homes in that sector are still appreciating. And please call us, Blackstone. We would love to help you.
Absolutely, we will. Another difference in 2008, 2009 time period and today is in that time period in 2008, the demand for housing really kind of disappeared because there was huge unemployment numbers, and in the supply, the inventory, the construction had been booming, and it was really high. And so we're not seeing that today. In fact, demand was high and there wasn't enough to cover it. So we're able to now absorb that supply, that inventory that was left, including new construction. Mm-hmm. So again, those two factors are in opposite positions,
right,
in this shift.
And during 8 of the last 9 recessions, home values still increased, 2008 being the only time that it did not. So the way this market has acted thus far, it's safe to say we'll continue to see home prices escalate.
Right, and it's showing up nationally too,
Right.
because we're part of a Place Network, which is all across the country. So I personally called in preparation for the CNBC interview and spoke and communicated with several agents from Tampa to Boise to markets in California. And I was just asking them about their particular market. Because again, even in years past when we've had shifts, Texas and Austin has always fared much better than other markets. So I was just curious, what are they seeing in their market right now? And repeatedly, the responses were that they're not seeing a drop in prices, really not at all. They're still seeing an appreciation, a stabilization in pricing, and a slowdown of that kind of that trajectory of pricing. It's really kind of slow down, kind of tapering off, and the number of sales is slowing down too, but the appreciation is still there. It's just a little bit tempered. So it appears that most markets are still experiencing growth. They still have a positive climate for buyers and sellers. And I believe, once again, the national media is just, and it's maybe not even that they're getting it wrong. It's just, it's not one forecast for the entire country.
Mhm.
So when they're speaking in very, very broad terms. And I really think that buyers and sellers require a micro approach for their market. And so often one neighborhood differs from another one just a few miles away.
Yes, definitely. And a strong real estate advisor is a counselor first and a salesperson second. And our goal is to always earn a seat at the table along a family's financial advisor, because we know that the vast majority of Americans' wealth is in their real estate. And it's critical that that purchase can be a foundation for their financial future, and what to do and what not to do and when to do it is critically important and requires a micro analysis of the situation, as you mentioned. So we're here to help you sort through that for any decisions that our clients might be making. And we're excited for you to join us for the next sections that we'll have later this week too.
All right, stay tuned.